Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us is Russell Rhoads, head of research at EQDerivatives, to discuss how September is historically the toughest month for the Nasdaq-100, but is it reflected in the options market? And Russell, I'm sure you have a number of stats to show us exactly how September is the toughest month of the year.
Of course, nothing like throwing some numbers out at you. As far as September goes, on average, it is the only month going all the way back to 1986 that the NDX is actually down. If you'd only owned the NDX for September every year, which I hope nobody has done this, on average, you would have lost 0.37% per month. The next closest month to that is actually August, but that's a gain of 0.72%. So when you just look at September like that, it is quite the outlier, but it's also an indication why when we start to enter the last 4 months of the year, everybody comes back and there's always a little nervousness going into the last few months of the year, just because we've had some pretty bad October surprises as well. And it's at least backed up by those numbers.
Are you seeing this reflected in the options market?
Not necessarily, and it's kind of funny. There's some slides going around in the FinTwit space pointing out that we're seeing a lot of put option activity, but put option activity is not necessarily bearish because you can sell options as well as buying options. And this is not a suggestion because selling put options, there's a lot of risk associated with that. But I started digging around just to see how option traders may be looking at September, and we have options that expire on September 30th, so you can have a targeted September outlook. I found some trading in the September 10,000 puts, which is down 18.5% from the end of August, but that was a seller. And then also came across somebody that was involved in the September 30th 9,800 puts, and which were down 20.4% from where NDX was when they traded them on August 31st. That was a seller too. So just because September's a tough month and we're seeing excess put activity right now, it's not necessarily an indication that traders are worried about September.
You know, it's so interesting, Russell, as you go through these trades that you've seen for September, and if you think about it historically as well, you would think that traders would be looking to put on a hedge, not necessarily be selling puts here.
Well, and if you see, one of the things that option sellers like to see is is higher implied volatility, and vol Q remains in the mid 20s, which is higher than average. So that's one thing that I think is attracting option sellers. The funny thing is, just because we've seen put option activity, and this is what led me to go looking at trades, we haven't seen like excess implied volatility for out of the money NDX puts. So without even having to do the digging like I often do, if you see people talking about put option activity, take a look at the volatility skew and see if it were elevated out 5 and 10% out of the money relative to at the money implied volatility for NDX options, I would say, yeah, everybody's piling into protection, but that is not the case at all.
All right, Russell, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.